What is the story of the divergence between the East and the West? What happened in China and the West that caused the differences that we see today? Were the salaries and the incomes of the East and West always so different? What are the advantages and the risks associated with foreign investment? How was Hong Kong ceded to the British? What were the Opium Wars? This is actually the third video on China that I've done, with the first one asking the question of whether China will overtake the United States as the world's largest economy, and you can see a link above to that video here. The second video was focused on the real estate crisis in China that it's currently experiencing, and again you can find a link above to that video here. And in this video we'll be looking at the divergence or dichotomy between the East and the West, and how this has evolved in the last 400 years or so. As always, we're focusing predominantly on the economies and financial education, rather than looking at the differences in culture, religion, etc. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future, and let's jump straight in. 300 or 400 years ago, there was very little difference between the per capita incomes in the West and the East. However, between 1700 and 1950, there was a large divergence between living standards in the East and the West. While China suffered a decline in per capita income in that period, societies in the Northwest, and Britain in particular, with its colonial offshoots, experienced huge growth due to the Industrial Revolution. And let's take a look at the details of that. By 1820, per capita income in the US was roughly twice that of China. By 1870, nearly 5 times higher. By 1913, nearly 10 times higher. And by 1950, nearly 22 times higher. The average annual growth rate of per capita GDP in the US was 1.57% between 1820 and 1950. In China, this was minus 0.24%. In 1973, the average Chinese income was 1/20th of the average American. In 2006, the ratio of US to Chinese per capita income was still nearly 23:1, and you can see that disparity in this graph here. Many reasons have been suggested for the Great East-West diversion, but the two main reasons as to why China struggled between the 1700s and 1970s are, firstly, the conquest of the Americas and turning the Caribbean islands into sugar-producing colonies. Secondly, the proximity of coal fields to the areas that were well suited for industrial development. But one credible assumption is that China's problems were, of course, as much financial as they were resource-based. There was a lack of fiscal competition in China that proved such a driver of financial innovation in Renaissance Europe, so in Italy for example, as well as a lack of capital markets and fewer incentives to develop commercial bills, bonds and equities. When modern financial institutions finally came to China in the late 19th century, they came as part of the package of Western imperialism, and China was vulnerable to patriotic backlashes against foreign influence, which we will see a bit later. Due to the rise of globalisation, by the middle of the 19th century, so the 1800s, the key technologies of the Industrial Revolution could essentially be transferred anywhere. And given the huge advantages of globalization, manufacturing textiles in China or India, for example, should have been a hugely profitable line of business. However, despite the investment of over £1 billion of Western funds, this went mostly unfulfilled in most of Asia. The reaction against this colonial exploitation was so large that the two most populous Asian countries ended up largely cutting themselves off from the global market from the 1950s until the late 1970s. It used to be said that investing in emerging markets could make you rich, but when things went wrong, it could quickly lead to financial ruin. For example, the first Latin American debt crisis happened in the 1820s, and the crisis in Argentina that pretty much bankrupted the House of Baring in 1890, followed by the rogue futures trader Nick Leeson who's pictured here, who finally finished Barings off in 1995. This was the UK's oldest merchant bank, for which he was put in prison for over 4 years in Singapore. However, according to cinephile investors like Jim Rogers, pictured here, there is almost no limit to the amount of money to be made in China. And a cinephile is someone who takes a strong interest in China. But how, if you're an investor in London or New York, let's say, how can you see what a foreign government or an overseas manager is doing when there's at least an ocean in the way? What if also, which was the case until relatively quite recently, most non-Western countries had highly unreliable legal systems and differing accounting systems than we do in the West. So if a foreign trading partner decided to default on its debts, an investor could find themselves with little they could do in reality. In the first era of globalization, when we are looking at this East-West divide, the solution to this problem was to impose European, and in particular here we're looking at British rule. And an example of that can be found through two Scottish men, William Jardine and James Matheson, who you can see pictured here. And they set up the largest British trading company in East Asia in the 19th century. There was even a book written about them that again you can see pictured here. One of their best lines of business was importing government-produced opium from India, but the opium they were bringing into China was for non-medicinal purposes, and that was banned by the emperor. So in 1839, an imperial official, pictured here, blockaded the opium godowns, otherwise basically the warehouses, and seized about 20,000 chests of opium valued at £2 million. The Chinese also insisted that British subjects in Chinese territory should submit to Chinese law. William Jardine wasn't happy about this, so he went to lobby the British government through the Foreign Secretary, and it was eventually agreed that the Navy, the British Navy, would intervene in 1840. This led to a military intervention by the British of blockades, capturing islands, seizing forts, and general disagreements, and it eventually led to the signing of the Treaty of Nanking in 1842, in which Hong Kong became a British possession, and it gave free rein to the opium trade in 5 different ports in China. British subjects could also operate in these cities with complete immunity from Chinese law. This military intervention was called the first of the Opium Wars and led to huge effects for China. Massive drug addiction, the destabilizing effect of the influx of Christian missionaries, and even a peasant revolt took place in which it's estimated that between 20 and 40 million people lost their lives. For Jardine, Matheson and investors in London though, financial opportunities opened up. An example of that would be through the ledgers of N.M. Rothschild and Sons, founded by Nathan Mayer Rothschild, who's obviously very famous. And they held a vast array of securities that they and their partners held in their multi-million pound portfolio. And what happened to all of the British capital that was raised through the public issues of securities between 1865 and 1914 due to this first example of globalisation, if that's what you want to call it? Well, most of it went overseas, with less than a third invested in the UK itself. By 1913, an estimated $158 billion in securities were in existence worldwide, and of all of the securities quoted on the London Stock Exchange in 1913, 48% were foreign bonds. A much higher proportion of pre-1914 capital export went to relatively poor countries. For example, in 1913, a quarter or 25% of the world's stock of foreign capital was invested in countries with per capita incomes of a fifth or less of US per capita GDP. In 1997, that proportion was just 5%. Most can be attributed to the rise of British imperial power, as between 40 and 50% of this British overseas investment went to British-controlled colonies and countries which it held considerable influence. And that does include Hong Kong, which, like other colonies, had been granted only limited political autonomy. So what is the downside of foreign investment? Between 1865 and 1914, British investors put at least £74 million into Chinese securities. It's a small amount considering the total of £4 billion that they held abroad by 1914, but an awful lot for China. But the answer for this downside of foreign investment can, like a lot of things, be found through war. Because in China, there was then a war with Japan from 1894 to 1895, followed by a revolution in 1900, which led to steep declines in the value of investors in Hong Kong's bonds and stocks. And this vulnerability of early globalization to wars and revolutions wasn't unique to China. It was true of the entire world financial system and still goes on today to a certain extent. There were, though, a lot of the advantages that globalization brought, and let's look at specifically some of the financial ones. By 1908, nearly all Europe's central banks had adopted the gold standard, meaning that large exchange rate fluctuations were minimized. Inflation was gentle by the mid-1890s, following deflation in the 1870s and 1880s. Higher growth raised tax revenues, long-term interest rates were low, the yield on the British console bond was almost at an all-time low, emerging market spreads narrowed dramatically. So to put this all together, this meant that anyone who had bought a portfolio of foreign bonds towards the end of the 19th century had enjoyed large capital gains. So we've essentially gone full circle in this video, and we've looked at some of the main aspects behind the divergence and the divide between the East and West in history, the reasons for it, and the consequences. But as always, I'd love to know what you think about the East-West divergence in the comments below, and if you found the video informative. And if you haven't already, please do like this video and subscribe to the channel, as it really does help. And have a great day.